SHX, the hidden rails of payments. In the world of digital assets, some names dominate the spotlight: XRP, Bitcoin, Ethereum. But behind the headlines, there are hidden players quietly building the financial plumbing of the future. One of those players is SHX, Stronghold, a token that few outside of dedicated circles know by name, yet one that could play a critical role in the Internet of Value. Stronghold isn't flashy. It doesn't claim to be the world's reserve currency like XRP or a high-speed consumer chain like Solana. Instead, it focuses on rails, the invisible infrastructure that moves value from one place to another. Just as railroads once connected cities and powered global trade, Stronghold aims to provide the behind-the-scenes pathways that let institutions, businesses, and individuals transact seamlessly in the new digital economy. Built originally on the Stellar network, SHX has its roots in Ripple's extended ecosystem. Stellar itself was born as XRP's twin, designed for accessibility and remittances. Stronghold extends this mission even further, acting as a bridge between fiat stablecoins and blockchain networks. It positions itself not as the star of the show, but as the quiet enabler, the middleware that makes money movement faster, cheaper, and more compliant. At the core of Stronghold's strategy is its focus on payments. Where most crypto projects chase speculation or DeFi hype, SHX zeroes in on enterprise-grade use cases: point-of-sale systems, merchant processing, remittances, and financial access for underserved communities. By anchoring itself to real-world payment flows, Stronghold ensures that its relevance isn't dependent on hype cycles, but on actual adoption. Part of what makes SHX so intriguing is its role in the broader ISO 2022 ecosystem. While XRP is the global bridge and Stellar provides consumer remittance pathways, Stronghold positions itself as a specialized hidden rail, the infrastructure layer that helps plug traditional finance into blockchain without friction. It is less about visibility and more about ubiquity. The average person may never hold SHX or even know its name, but they may use services that rely on it every day. This positioning makes SHX one of the most speculative but fascinating tokens in the Ripple Stellar orbit. Its low profile belies its potential importance. If the Internet of Value is truly about connecting everything, people, banks, corporations, blockchains, and currencies, then tokens like SHX will be the grease in the gears, the rails under the train, the invisible wires carrying the current. Of course, Stronghold faces questions. Can it carve a niche when giants like XRP and Stellar already dominate conversation? Will its hidden rails approach make it too invisible to capture investor attention? And perhaps most importantly, will it find the enterprise adoption necessary to give SHX token lasting utility? This is the story of Stronghold, the quiet hidden rail in the Internet of Value, a token designed not to shine in the spotlight, but to make the spotlight possible. The next chapter explores the origins of Stronghold, how it was built on Stellar, its early mission, and why it chose to embrace the role of hidden infrastructure instead of chasing hype. Part 1. The Origins of Stronghold. To understand Stronghold's place in the Internet of Value, we need to rewind to its beginnings. Born on the Stellar blockchain, Stronghold, SHX, was created with a clear purpose: to make payments faster, cheaper, and more inclusive. While Stellar itself was designed to connect people across borders, Stronghold positioned itself as a focused player, building services and infrastructure that could bring blockchain payments directly into the hands of businesses and consumers. Founded in 2017, Stronghold entered the market during a time when crypto was still largely speculative. The narrative was dominated by Bitcoin's rise, Ethereum's smart contract experiments, and the ICO boom. Yet Stronghold chose a different path. Instead of promising revolutionary platforms or sky-high returns, it concentrated on enterprise use cases. Its mission was simple but ambitious: bridge the gap between traditional finance and blockchain by offering stable payment rails that institutions could trust. Stronghold launched its own USD stablecoin early on, years before the explosion of USDC and the wave of stablecoin adoption that followed. By tokenizing dollars on Stellar, Stronghold enabled businesses to settle instantly in digital dollars while still maintaining compliance with financial regulations. This move positioned it ahead of its time, a quiet precursor to the stablecoin race that would later dominate crypto. But Stronghold wasn't just about issuing a token. It wanted to build a complete payments ecosystem. From merchant services and APIs to integration with point-of-sale systems, Stronghold sought to make blockchain payments invisible to the end user. A customer tapping their phone at checkout wouldn't need to know they were transacting through Stellar and SHX. They would just know it was instant, cheap, and reliable. This focus on infrastructure over speculation made Stronghold unusual in the crypto landscape. Many projects launched with hype-driven promises, only to fizzle when markets crashed. Stronghold, by contrast, stayed grounded. It worked with banks, fintech startups, and developers to slowly expand its rails, often under the radar of mainstream crypto coverage. Its choice to build on Stellar was no accident. Stellar's consensus model, low fees, and mission of global financial access aligned perfectly with Stronghold's vision. While Ripple targeted banks and cross-border settlement through XRP, Stellar focused on individual users and remittances. Stronghold fit neatly into this ecosystem, extending Stellar's reach into business payments, merchant adoption, and enterprise-grade services. The SHX token itself was designed to support this mission. Unlike tokens built purely for speculation, SHX's utility was tied to the growth of Stronghold's network. It served as a way to align incentives, encourage usage, and reward participants in the ecosystem. Though its price would rise and fall with markets like any crypto, its purpose was always rooted in infrastructure. Of course, Stronghold's low-profile approach came with trade-offs. Without hype-driven marketing, it never attracted the same retail buzz as bigger projects. Many investors barely knew SHX existed, and even those who did often underestimated its potential. But that was part of Stronghold's design. It wasn't built to dominate headlines. It was built to quietly power payments behind the scenes. Looking back, Stronghold's origins reveal a consistent theme: pragmatism. Where others promised revolution, Stronghold built rails. Where others chased speculation, Stronghold focused on adoption. And where others tried to be everything at once, Stronghold embraced being invisible infrastructure. The next chapter explores how Stronghold evolved from its early experiments into a payments network, including its partnerships, real-world integrations, and the unique role SHX plays in the ecosystem. Part 2. Building the Stronghold Payments Network. Stronghold's origins on Stellar gave it a foundation, but its real test came when it began building out an actual payments network. Unlike most blockchain projects that remain theoretical or experimental, Stronghold focused on deploying real-world services that could handle everyday transactions, merchant payments, remittances, and business-to-business settlements. At the center of this effort was Stronghold's early USD stablecoin. Years before USDC and PayPal USD grabbed headlines, Stronghold had already launched a tokenized dollar backed by reserves and issued on Stellar. This digital dollar became the backbone of Stronghold's payment strategy. Merchants could accept it, consumers could use it, and businesses could integrate it without being exposed to the volatility of crypto markets. But the stablecoin was only one piece of the puzzle. Stronghold built application programming interfaces, APIs, and developer tools that allowed businesses to plug into its network. For small merchants, Stronghold offered point-of-sale solutions where customers could pay instantly using blockchain rails, with conversions happening in the background. For larger enterprises, Stronghold created systems that could move funds across borders, settling in digital dollars at a fraction of the time and cost of traditional payment processors. Stronghold also emphasized compliance from the beginning. While other crypto payment providers ignored regulations, Stronghold sought licensing, banking relationships, and partnerships that made its services enterprise-ready. It wasn't trying to disrupt finance by breaking rules. It wanted to modernize finance by working within them. This approach won it credibility among institutions that were wary of crypto's Wild West reputation. A notable milestone came when Stronghold partnered with IBM's blockchain division. In its early years, IBM was exploring Stellar for cross-border settlement, and Stronghold's USD stablecoin became one of the first assets used in these pilots. While IBM's blockchain ambitions eventually scaled back, the partnership underscored Stronghold's role as a trusted player in enterprise blockchain. Stronghold also invested in community-driven financial access. Its rails weren't just for big corporations, they were designed to help underserved communities. By offering low-cost remittances, instant settlement, and interoperability with Stellar anchors, Stronghold positioned itself as a payments network that could deliver value both at the top of the financial pyramid and at the grassroots level. The SHX token tied into this ecosystem as both a utility and incentive layer. Businesses using Stronghold's network could integrate SHX for discounts, liquidity, or rewards. Developers building on Stronghold rails could leverage SHX to align with the broader ecosystem. Unlike many speculative tokens, SHX's value proposition was directly linked to the health and adoption of Stronghold's payments network. Despite these efforts, Stronghold remained under the radar compared to splashier projects. It didn't chase hype cycles or spend heavily on marketing. Instead, it slowly built partnerships, onboarded merchants, and refined its infrastructure. This quiet builder approach limited its visibility in bull markets, but gave it resilience when bear markets wiped out hype-driven competitors. By focusing on payments infrastructure, stablecoin issuance, and enterprise compliance, Stronghold carved a niche as a hidden rail of the blockchain economy. The average crypto trader might overlook SHX, but businesses and developers working with Stellar saw it as an essential piece of the puzzle. The next chapter explores Stronghold's place within the ISO 2022 ecosystem, how it connects to Ripple, Stellar, and the broader Internet of Value, and why SHX matters even if it remains invisible to most of the market. Part 3. Stronghold and the ISO 2022 ecosystem. Stronghold may not be the most famous token, but its role becomes clearer when placed within the broader puzzle of ISO 2022 adoption and the Internet of Value. ISO 2022, the new global messaging standard for payments, is reshaping how banks and institutions communicate across borders. And tokens like XRP, Stellar, Lumens, XLM, and SHX are lining up to serve different layers of that system. XRP has staked its claim as the bridge currency, the neutral settlement layer that connects banks and payment providers around the world. Stellar has leaned into remittances and accessibility, focusing on individuals, NGOs, and consumer-level cross-border flows. But where does Stronghold fit? Its answer: as the hidden infrastructure rails providing specialized payment processing and merchant services that bring enterprises into this new financial standard. ISO 2022 isn't just about data formatting, it's about interoperability. And interoperability requires not only currencies, but rails that can carry them. Stronghold's early focus on issuing stablecoins and building merchant tools makes it a natural complement to XRP and Stellar. While XRP handles liquidity and Stellar drives inclusion, Stronghold ensures that businesses have the on-ramps, tools, and compliance pathways needed to plug into the new system. This alignment is what makes SHX intriguing. Unlike speculative projects trying to position themselves as the next big thing, Stronghold quietly positions itself as a support token, a role that might not generate headlines, but is indispensable. If XRP is the engine and Stellar is the passenger car, Stronghold is the track itself, invisible to most passengers but essential to the journey. Stronghold's compliance-first approach also resonates within the ISO framework. One of the biggest obstacles to crypto adoption in banking is regulatory friction. By designing with regulators in mind, Stronghold offers rails that institutions can actually use without fear of audits, sanctions, or reputational risk. This is why SHX often appears in discussions of the ISO 2022 hidden set of tokens, projects that may never dominate speculation but are essential for institutional adoption. There's also a practical reason SHX could matter in the ISO world: stablecoins. While XRP provides liquidity and XLM drives accessibility, stablecoins provide the denominator of trust. Enterprises prefer to settle in something pegged to fiat, and Stronghold's early focus on USD stablecoins positioned it to serve that role. By integrating stablecoins into its rails, Stronghold ensures that the ISO ecosystem has not only bridges and access, but also stable units of account for enterprise-grade settlement. Of course, being a hidden rail has downsides. Retail traders often overlook SHX because it lacks the headline-grabbing partnerships or massive trading volumes of its peers. Yet invisibility can also be a strength. Just as most people never think about Swift codes or ACH transfers but rely on them daily, Stronghold could end up being ubiquitous but invisible in the ISO-driven future. The relationship between Stronghold, Stellar, and Ripple illustrates a broader truth. The Internet of Value is not about one token winning. It's about different layers of infrastructure working together. XRP connects banks, Stellar connects people, Stronghold connects businesses. Together, they form a constellation of rails, bridges, and liquidity that could move trillions across borders seamlessly. The next chapter explores the challenges and risks Stronghold faces, from competition and visibility to adoption hurdles, and whether SHX can secure its place as one of the hidden engines of global payments. Part 4. The challenges facing Stronghold. For all its quiet progress, Stronghold faces steep challenges. Being a hidden rail has advantages, but it also comes with risks. From lack of visibility in markets to competition from larger players, to the uphill battle of adoption in a space dominated by giants. The first challenge is awareness. In a market that rewards hype, Stronghold's low-profile approach often leaves SHX overlooked. Retail investors chase coins with flashy narratives, big partnerships, or explosive price action. Stronghold, by contrast, has built slowly, prioritizing compliance and infrastructure. While this makes it credible with institutions, it leaves SHX in the shadows of tokens like XRP and Stellar, whose brands resonate far more widely. For SHX to thrive, it must balance its invisible role with enough visibility to attract the capital and community needed to grow. The second challenge is competition. Payments is one of the most crowded sectors in blockchain. From established giants like Visa and MasterCard experimenting with stablecoins, to crypto-native solutions like USDC, PayPal USD, and even Ripple's own RLUSD. Stronghold faces competition on all sides. Its niche as a merchant-friendly, infrastructure-focused rail helps it differentiate. But scaling that niche into a meaningful market share requires resources and partnerships that Stronghold must continue to cultivate. A third challenge is network effect. Payments rails thrive on adoption. The more merchants, consumers, and businesses that use Stronghold services, the more valuable SHX becomes. But reaching critical mass is notoriously difficult. Competing rails have deep pockets, large user bases, and existing integrations. Stronghold must win over merchants by offering not just blockchain novelty, but clear advantages in cost, speed, and compliance. Without this, SHX risks being a technically sound solution that never gains traction. The fourth challenge is integration with ISO 2022. While Stronghold positions itself as part of the ISO-aligned ecosystem, actual adoption depends on banks and enterprises choosing to use its rails. XRP and Stellar already dominate conversations around ISO integration. Stronghold's role is subtler, but also harder to prove. Unless Stronghold secures more visible partnerships and pilots, its claim as a hidden rail may remain theoretical. Regulatory uncertainty is another risk. Although Stronghold has embraced compliance, the shifting landscape of US and global regulation could create hurdles. Stablecoin rules, licensing requirements, and new frameworks for payments providers could force Stronghold to adapt quickly, something larger players with more capital might be better equipped to handle. Finally, there is the market perception of SHX. Many investors struggle to value tokens tied to infrastructure rather than speculation. XRP's utility as a bridge and Stellar's role in remittances are narratives the market can easily grasp. Stronghold's invisible rail identity, however, is harder to package into a simple story. This may limit speculative interest, keeping SHX undervalued relative to its actual utility. Yet challenges often hide opportunity. By avoiding hype, Stronghold has positioned itself as a survivor in an industry where many projects collapse. Its focus on compliance may give it an edge as regulators crack down on less transparent competitors. And its positioning within the Stellar and Ripple orbit gives it credibility as part of the broader ISO 2022 constellation. Stronghold's fate ultimately depends on execution. If it can expand adoption, secure partnerships, and prove its rails are indispensable, SHX could emerge as one of the quiet winners of the Internet of Value. But if it fails to overcome its invisibility, it risks remaining a footnote, a technically sound project overshadowed by louder voices. The next chapter explores the future of Stronghold, its speculative role as a hidden rail, its potential impact on payments, and whether SHX can become one of the invisible engines powering the new financial system. Part 5. The future of Stronghold. The future of Stronghold lies in its ability to prove that the invisible can still be indispensable. In a world chasing headlines and hype cycles, Stronghold's value proposition has always been different. Build rails, not revolutions. But will this approach make SHX one of the hidden engines of the Internet of Value, or leave it forgotten in the shadows? One possible future is the integration arc. As Ripple, Stellar, and other ISO 2022 aligned projects expand their reach, Stronghold could cement itself as the middleware that ties them together. Enterprises using RippleNet for cross-border flows might also rely on Stronghold's stablecoin services for merchant payments. NGOs working with Stellar anchors might use Stronghold's APIs to integrate remittances directly into point-of-sale systems. In this future, SHX thrives by being everywhere and nowhere, powering transactions behind the scenes while rarely being noticed. Another future is the specialization arc. Instead of trying to compete with giants, Stronghold could carve out niches where its rails provide unique value. For example, underserved communities that lack access to traditional banking could use Stronghold-powered wallets and merchants to leapfrog into digital finance. Small businesses, too costly to integrate with Visa or MasterCard, could plug into Stronghold for instant settlement and lower fees. In this path, SHX becomes the token of choice for grassroots adoption. Not because it dominates headlines, but because it quietly solves problems others ignore. There is also the enterprise arc. As tokenization expands, corporations will need rails to move tokenized dollars, assets, and credits seamlessly. Stronghold's early experience with stablecoins positions it to become part of this movement. Imagine a supply chain where invoices are tokenized in RLUSD or USDC, but the settlement flows through Stronghold's rails at checkout. In this scenario, SHX operates as a critical but invisible lubricant in enterprise tokenization. Of course, less optimistic futures exist. Stronghold may remain too obscure, failing to attract enough adoption to sustain SHX's value. Larger players like USDC, PayPal, or Ripple's RLUSD may dominate the very niches Stronghold hopes to serve. In this scenario, Stronghold becomes one of many technically capable projects that fade into irrelevance, remembered only by those who followed it closely. Yet even here, Stronghold's resilience is worth noting. Its focus on compliance, enterprise partnerships, and stablecoin infrastructure gives it durability in a space where many projects collapse. Even if SHX never becomes a household name, it could remain a survivor, a token that quietly endures while others burn out. Speculatively, Stronghold's greatest strength may be its invisibility. The Internet of Value will not be built solely by tokens in the spotlight. It will be built by rails, pipes, and infrastructure that most people never see. Just as we don't think about SWIFT messages or ACH transfers when swiping a card, future users may never realize that SHX is powering their payments. And that's exactly the point. The future of Stronghold may not be about glory, but about persistence. It may never rival XRP or Stellar in brand recognition, but if it succeeds in building rails that institutions, merchants, and communities rely on, it will have fulfilled its mission. In the end, Stronghold's story is a reminder. Not every engine of the Internet of Value needs to roar. Some will hum quietly in the background, hidden but essential. SHX may just be one of them. The canary networks test, the bridges connect, the stablecoins fuel, and the hidden rails carry it all forward. The hidden rails Stronghold may never dominate headlines, but that was never the point. Its mission has always been to build rails, invisible, compliant, resilient rails that connect people, merchants, and enterprises to the Internet of Value. While XRP and Stellar shine in the spotlight, SHX works quietly in the background, proving that sometimes the most powerful engines are the ones you never see. As global finance transforms, the winners won't just be the coins with the loudest communities. They'll be the projects that actually move money, settle payments, and bridge old systems with the new. Stronghold sits in that category. Underestimated, overlooked, but essential. And so when history is written about the shift to tokenized finance, don't be surprised if SHX appears not as the star, but as the rail that carried the world into the future. This has been Stronghold, the hidden rails of payments. If you found value in uncovering the story of SHX, don't forget to like, share, and subscribe to LTL Productions, your front row seat to the Internet of Value.